If I were a rich man, I do. All day long I'd sing a little song. If I were a wealthy man. Hey! Are you a fiddler on the roof? To one and all. And if this is your first time here, I am the vocal talent that is the scruffy trade. And I say that with very inverted commas. I love a sing-song. I genuinely do. I love a coffee as well. Because we all know Scruffy likes a coffee. And that's what we're doing today. Coffee with Scruff. It's kind of where I ponder my thoughts across the week. And I just switch the camera on and out it comes. Because nothing's ever scripted here. And whenever you see any of my videos, they're never scripted. It's just me at my job, showing you a little bit about what I do. And the word there is job, because it is my job. Yes, I get a little bit out of YouTube for doing this, but it's my hobby. My wages come from the screens. And this is kind of the subject of today, because if I was doing this yesterday, this would be a very swear-induced... well, let's just say I was raging yesterday from stupidity. But not mine, other people's.
With a brain a third the size of us. It's science.
Because if you want to do this as a job, you have to apply something called common sense. And I think that is where this industry falls down. I think there's a lot of people out there. They kind of go in the forums and they listen to the hype and the noise and they apply no common sense. You know, you cannot turn 200 quid into $1 million overnight. You cannot sustain 200% growth daily indefinitely. It's just not happening, guys. And if you think that they are, then you are not applying common sense.
Are you serious?
So I hope this is kind of hitting home a little bit. But yesterday, for argument's sake, I don't use a lot of forums anymore. For very good reason. I only actually go into two. My own, which is the Scruffy Squad. I'll go in there, but even sometimes in there, they get devoid of common sense by some people. Case in point. The subscription for it starts at $1.99, of which I get pennies. And they lost, not by taking anybody's advice. This is 3 individuals. And then kicked off and wanted me to pay for their losses. What planet are you living on? I don't do signals. I certainly don't tell you to trade when and where. I just give you the tools to apply it for yourself. And when I'm trading, I'll tell you exactly what I'm doing before I do it. I'll do a breakdown of why I'm doing it. And then it's up to you what you do. But what happens is, this is where the common sense part comes in. They'll tinker with it. They'll change it. They'll swing for the fences. And inevitably lose. Because they've got the stops in too tight because they're frightened of losing it. Well, it just takes one wick, that takes you out. Or they think, well, instead of getting 20 pips, because that's all the chart is about to give you, they try and get 200 pips. And then obviously the market will run up, doesn't get anywhere near that, comes back, takes you out, lose your money. And then the cheeky sod send me a message saying I should pay for that. No, use some common sense and grow up. You have to take responsibility for your own actions. And that's where this industry falls down. I see it all the time. Oh, this is free. I will teach you free. Nothing in life is free. And if you think it is, you're in La La Land.
If you're good at something, never do it for free.
You get out of it exactly what you pay for it. You pay nothing for it. It is worth nothing. Now, payment, and I've said this a few times, is not always money. A lot of the time it is just bloody hard work and commitment. That is payment. But it's payment in a different type of currency. It's a currency called time. Now, if you can't put the time in and pay with your time, you're not going to do it. Because there's no magic pills. It takes a long time to become a trader. You can learn the technicals in a week, but the mindset and the understanding of how charts work, well, that takes a skill. And it's a skill that you hone over time. And I hope that gets through. But there's a common thread with what I'm talking about today, which is common sense. And I'm going to go on the board and I'm going to show you how to build a strategy based on common sense. And this might help you. And then if you want to add further into that, then you pay for it with time, or you come into a community like what the Scruffy Squad is. And if you're interested, there is a link in the description below. And you'll see it being honed, and you'll be able to learn of people who actually do it and make money from this. Rather than what I've seen this morning, sort of in the 5%ers group, where it seems to be getting flooded with Telegram groups at the moment and people trying to sell things. And their claims are just unbelievably unrealistic.
They've done studies, 60% of the time, it works every time.
That doesn't make sense.
And if you're sucking into this, well, I've got a hard lesson for you to learn. It's going to cost you a fortune. It grieves me when I see it. It really does. I mean, I know I take the mick and I call them unicorns and one thing and another, because that's exactly what it is. You're hunting a unicorn. And the only thing is, the only unicorn you're going to get is the real one. And here it is. It's not going to be money flying out the arse of a unicorn. It's going to be a real life rhino unicorn sticking its horn right up your arse. And bugger me, you do not want that. Because I've got a funny feeling it might hurt. But then again, after what I've seen in some of the groups, they might like it. Popeye! I'd love it if Popeye got one up the arse. That would be great. I'd laugh my cotton bollocks off. I really would. And why? Because they kick me in the bollocks constantly.
Who'd be stupid enough to do that?
Justify, stupid.
Oh, I nearly got on one there. I really nearly got on one there. Yes. Yes, if it was yesterday, I would have definitely got on one. Why? Well, I'm old. I'm allowed to get on a rant when you're old. When you're over 50, you can rant till the cows come home. Why? Well, why not? I've earned the stripes. I've earned the stripes for it. But I've also earned the stripes on the charts. And how did I earn those stripes? With common sense. Now, I'll touch on common sense just for a second. And, well, in fact, before I touch on common sense, I'll show you kind of my stat. Why? To back up what I'm saying. Because anybody can switch your camera on. Anybody can put a trading view screen on and say, I got in here and I got out there. I was watching one yesterday and they're saying, oh, this is it. And one thing, and I'm like, well, that's a cherry picked chart. That's not really in the moment, is it? And any system can be made to fit any chart. And why? Well, because hindsight's a wonderful thing. Now, I touched on the Scruffy Squad, and hopefully the guys will testament to this. Every morning between 6 and 8, I'm there, I make a strength sheet, I work out what I'm doing, why I'm doing it. Between 8 and 9, I normally post up a video of the trade I'm going to do for that day. My reasons for why I'm getting in, roughly what I'm going to be doing. And then later in the day, I'll trade. So it's all done beforehand. To me, that's fair. TradingView is good for training purposes and going hypothetical and saying, well, this is what would have happened and blah, blah, blah. But to say, I made it here and I made it there. Oh, look, there's a unicorn. Sorry. Let me just show you some stats and kind of back up what I'm talking about. I'll touch on this in a minute because this does sit with common sense to me. I'm actually exploring crypto for a friend of mine, and let's just say if I think there's unicorns in the Forex market, bugger me, in the crypto market, these ones are stellar. You know, they've got a big giant S on the front, you know, but not the Superman S. It's the one that says shiny shite. I mean, bloody hell, they fly through the sky with rainbows shooting out of that tail. Right, okay. Let me flick it over. Oh, I'm on one today, boys and girls. Am I on one today? Right. When you look at the markets, there's a couple of ways you can go into it. Now, this is the 5%ers. It's a prop fund that I currently use, and I did it for the Scruffs. As you can see, there it is. It's me. That's my name. This is a 50 grand account. It's just steady growth. I mean, for this period, where are we at? So this running month, I've not lost a day. I've got 1,100 quid worth of profit in it. 700. My current stats are 725 trades, 89% hit rate, and a profit factor of 1.4. So could be better, but steady growth. Okay, and it's not a fluke. I run a number of accounts for these guys. Let's have a look. There's another one again. Pretty much same period. No losing days. 490 trades. 88% hit rate. And again, 1.4. Okay. And as you can see, the dates over there, it's current. Okay. I just apply common sense to these guys. Little steps every single day. And if I can do that, it makes me money. And I get paid every single month off them. If you check some of the accounts or some of the videos, you see I sometimes pull up my deal statement where you see my payments. It's not the end of the month yet, so I'll look at that maybe next week. But what I'm illustrating here is it's all well and good saying you can do it. This shows you I can do it. Right? Now, if you are wanting to try the 5%ers, there's kind of two number of routes. Go down a boot camp. It's pretty low barrier to get in. It's about 85 euros, I think it is at the moment. Let's have a look. Should be able to get you the current prices up on here. Yeah, 85 euros for the boot camp. 3 challenges, and then they'll give you a 100k account. You've got freestyle, which is it's a netting program, which is very similar to the Bybit that I was looking at, because they work on netting as well. And what that means is it's an average of your total positions. So you could put 5 positions in and it'll work out the average of the 5 in a single direction. It's quite a good way of getting into the markets. Once you get your head around it, it's quite good. Because what you're doing is kind of you're building up a pot and off you go. Again, you only have to do 100 trades with that before you get funded, 30 of which need to be profitable. And you need a factor of 2 to 1, which is common sense. You know, in other words, your profits outweigh your losses. And again, that has a starting balance of 285. And they'll fund you up to 4 million with these guys, with this. I mean, that's unbelievable. 4 million. You know, and that's not unicorn. That is just hard work, because they don't give you it straight away. You've got to work your way up to it. And then you have what I do, which is instant funding. I know what I'm doing. I've traded a long time. I trade full time for a living. So I just went instant funding. Then I'm paid my profits from day one. And again, from €235, you're straight into market. You know, if you put that into a broker, it would take you a long time to build up. Whereas with a prop firm, you can kind of accelerate that. But if you did want to go into a broker and you're curious about what I use and one thing and another, BlackBull is kind of my recommended broker of choice. Why? Well, quite simply, very tight spreads, low barrier of entry. They currently do have 1 to 500 leverage. So what it means with that is you can pretty much trade any product you want and get some money out of it. Just be careful with leverage, because as quick as you make it, you can lose it. But what it's doing is it's giving you the ability to be flexible. And then your platforms is up here. That is there. You can use your web trader, or MT5, which you often see me trade as well. I like to use, I do all my charting with a web trader account, and MT5 is also excellent. And if you're using the 5% as prop fund, it is MT5 that they use. So I recommend both of these wholeheartedly. And if you're using BlackBull, there's a link in the description below. Drop some money in and trade a little bit. In other words, show a bit of commitment. I'll show some commitment and I'll give you a free 1-to-1 to set you on your path. Can't be any fairer than that. And for the 5%ers, well, it goes a little bit better than that. There's a 5% discount link in the description.
No way!
So there you go. But I was talking of common sense, and I'm going to come back to this platform. Now, when it comes to common sense, what you've got to remember all the time is a market will only move so far. And if you're seeing somebody saying, oh, I get 100 pips out of the market every day, do they? Do they really? I would love to see it. And the one thing I would love to see, and I've mentioned this a couple of times in 5% forum, and I always get shot down because there's always an opinionated person who has an amazing system. All right, whether it's I'm going to sort of 10 times my account doing something, or I've got in here and I got out there on a chart. None of them show a statement, not one. And if you question it, they get quite aggressive and, well, like I said, opinionated. Why? Because the one who shouts the loudest is normally the guiltiest. That's what I've found in life, you know. You know what I mean? You've heard me talk about barstool managers before. And if you don't know what a barstool manager is, it's the moron who sits in the pub at the corner and he's constantly holding court with the loudest voice ever, knows everything about everything, tells you how to live your life, but actually probably unemployed, scrounges a pint because they can't afford to buy one. They're lucky if they're married. Normally they live in the basement with their mother, and the closest they've ever been to a woman is when they go, Mom, can I have a cup of tea? That sort of person. They are what's called losers, and they can only dream of it, you know, and they lash out because they can't do it, you know. But that's a different story for a different day. But I call them barstool managers because that's all they do. They just sit on the bar stool. Whereas, well, there's another word I've got for them as well. I call them gunners a lot as well. And it means, I'm gonna do this. Well, don't gonna do this. Do it. And then talk about it. You know, when I did the 5%ers, the reason I've got a number of accounts is I did it and someone said, it's a fluke. You couldn't do it again. So I did it 3 times off the belt. So it was a case of, what is it they say? If they say you can't do it twice with pictures, well, I did it 3 times with pictures, all live, all documented, just to shut them up. And it still didn't. And I thought, to hell with it. I'll just do my way and let them get on. So, common sense. I'm getting off on one again, boys and girls. I really am getting on one.
Calm down.
I had a day yesterday. Bugger me did I have a day. Just as well the dog was here. I took it out in the woods. It's great. Nice calm down, great. Let me jump on the whiteboard and I'll give you something to think about. That is common sense. All right?
Well, we're waiting.
Okay, guys. So let's continue this journey of common sense. What has that got to do with trading, and how does it really transform itself into a chart based on normal figures? Well, let's talk about figures. As a salary, I want 30 grand a year. Why 30 grand? Well, it's very simple. That's enough to pay my bills. My car's paid for. I want to go out for lunch when I like to go out for dinner when I choose. And talking of things that I like and choose, here's my coffee from Lil Wonderwink. Is this nice? Is this actually what have you brought me a coffee for? What do you want?
I thought you'd want one.
Really? Talking of common sense, there's always an ulterior motive. What have you done?
I haven't done anything.
How much have you spent?
You haven't spent anything.
You're lying. Right. So my salary has now increased to 60 grand because Winky's just walked in. No, sorry. I'm looking for 30k a year. And 30k a year covers my bills. Right? Means all the household bills are paid. Means maintenance on the car's paid. Holidays paid. All of that sort of thing. Anything I do above is a bonus. But where's the common sense part? Because if I just aim for 30 grand, well, it's a massive figure. It's too much. I have to break it down. So I break things down into little chunks, and I'm going to jump on this board a bit more and show you little chunks to build a strategy. But I'm going to use this as an example. So how many weeks of the year do you think you're going to work? Well, I'm not going to work 52 weeks of the year because I might want a break. Common sense. So I'll take 4 weeks off. So that means I need to divide that by 48. Okay. 48 weeks of the year. That means 30 grand equals 625 quid a week. 625 pound a week. Great stuff. I only want to work 3 days. Why? Because I know Monday is a hard day and I know Friday is a hard day. So my trading days is Tuesday, Wednesday, Thursday. Well, divide that by 3 and that gives me my 200 quid a day. And that's, to me, is common sense. So when you see me starting to do a trade, that is how I do it. All right. But then I take it a bit further because I now need to understand how I get £200 a day. You know, now this can be anything you want. You might just aim for £10 a day. On the 5%ers, if I do 20 quid a day, I'm doing well because it is based on the relevance of the account. And when I say the relevance of the account, when you look at a prop firm, I look at the drawdown as how much money I have to play with. When I look at my wage account, I look at the overall account. So again, it's relevant. So what does that mean? Well, if I can do 20 pips at £5, that's 100 quid. And you hear me say I trade once or twice a day. Times that by 2. 200. Very simple. Does this make sense to you guys? Because that is roughly the first thing that runs through my head, and I haven't even looked at a chart yet. I'm breaking down what I need to a basic form, all right? Common sense. So now I have figures in mind. I know what I can work with, all right? And what you got to remember from that is it takes money to make money.
Isn't that logical?
Where is the chart involved in this? Well, look at the chart the same way. Break it down in a similar fashion. Say you're looking at a chart, and it could be euro dollar. Right? So we're looking at euro USD. Now its ATR fluctuates between 60 and 70 a day, give or take. All right. So if the price is here, so that's your starting point, it can move 60 that way if it never looked back, because the ATR has told us this. It can also move 60 that way. All right. So you have a breadth of market of 120. All right. That's give you in a trading arena. So where's the common sense part of this? We know that's an upper limit and that is a down limit. So if I have something in my head that tells me that this is going up, common sense tells me to place my stop underneath there. Why is that? Because that's the limit of the market. If it goes any further than that, we are definitely in brown town. We're wrong. So that's common sense for placing a stop, using basic math from an ATR. But what else can we assume from this? It can help you target. It can help you target effectively as well. Because as I was talking earlier on about swinging for the fences, we know this does 60 pips in a day, give or take. All right. If you're day trading and you're thinking to yourself, I'm going to do 200 pips, well, how are you going to fit 200 pips in there? You're not. Right? And if you think for a second, you're going to watch the market go up, come down, go up, come down, go up, come down, go up, and you're going to enter here, exit here, enter here, exit here, enter here, exit here, and catch every wave, as I've seen on some of the forums or in recent forums, you're in cuckoo land. That ain't common sense. That is stupidity. You need to think about how the market's reacting and how you're going to work with it. So let's get a little bit of nitty gritty. But you can use the ATR for an effective target as well as an effective stop. And why is that? Well, let's just explore it a second. We know the price is here. Lower level, upper level. And it can move 60 to there or 60 to there from that center point. Right, okay. If we are assuming that it'll move halfway and pull back, because the 50% of any move is quite relevant, that is a move up of 30 before it reacts. Okay. Are we safely going to get the top or the bottom? Probably not. Okay. There's an old term in trading called try to pick bottoms, you're going to get smelly fingers. And that is very true. So you want to trade the short hand. Well, if we know that it's roughly 30 safe, well, 10 to 20 pips is even safer. So you've used common sense just to frame everything. All right. And then comes up, hits your target, you feel good. Let it react, go up 30, get you 10 to 20, feel good. Twice, stop. Why stop? Because you've hit your money. Simple stuff. And this is roughly how I start working things out. Now, I haven't even looked at the chart yet, as in finding a trade idea. So I'll do that now, and I'll show you elements to build up a strategy of your own, because strategy isn't the be all and end all of trading. It's the homework that goes behind it. Let me explain. So I'm going to put something on here that is the best indicator there is. That is right there. Oh, I know you're sort of looking at that and thinking, hold on a second here, what's going on? That's just a dot. It's the parabolic star. That's it. That's it, isn't it, Scruff? It's the parabolic star. Oh, thanks for that. Well, I'm going to have a coffee. You think about this. No, it's not. This is the here and now. It is the current price. That is the best indicator there is. Why? Because it is present. When you see all these other indicators that are around, and there are good ones, and believe it or not, the most basic indicators are the best ones around. Why? Because they've been here forever. Nothing is new in trading. When you see the shiny bollocks of, oh, I've got a system and it says when this arrow goes there, you get in, and then it shows you where this arrow here is, and you get out. Yeah? Well, if you're that good, why are you selling it for 500 quid? Sell it to bloody Goldman Sachs, they'll pay millions for it. Just a thought. No. Trading is about the human condition. It's about understanding psyche and reading markets. There isn't a mechanical system in the land that will work long term. Not one. Because if there is, there wouldn't be a trader around. As long as the human brain is pressing those buttons, that is how trading is done. Right? Take yesterday, for example. There's not a robot in the land would have predicted what happened yesterday, and every one of them would have been crippled. Human nature. How did I get out of it? Just didn't trade it in the first place. Simple stuff. It's Friday. So, what am I driving at? Well, if that's the here and now, you need to set some boundaries. Okay. Level. Level. So why are the levels important? Because they came from the price in the first place. What's that, Scruff? Right. Put some candles in. Okay. Just assume that it's kind of in a little bit of an uptrend of sorts. Just put some candles in here. Right. So what we're looking at here is a confirmation. 3. Created a level. That level came from price. So we know they're valid. Simple stuff. And in the past, the same thing would have happened for this level. So we know each one of these levels is price driven. This is common sense, guys. And I'll keep saying common sense to things. Now the price at this current moment in time is bang in the middle between two levels. So we already at a 50% system. And I know you scratch your head and go, how the hell is that 50% system? Well, we know what happened in the past, but we've got no idea what's happening that way. None of us do. It could be a black swan event. You could be so unlucky at the point you press the button, the market tanks. Happens. Happened yesterday. So what happens? It's got as much chance of hitting there and there as each other at this moment in time. 50%. Right? So your profit factor at this moment is 50% because it can go either way. So we need to add little layers of confirmation. And that's where your indicators come in. They don't define the price. They just help you shape it. Okay. So something as simple as a moving average. Okay. So you could have a 50. And a 100. So what that example's showing you is you're making a choice. And that choice is the 100 and the 50 are on the screen and the 50 is above the 100, telling you it's an uptrend. You have a key level that it is just broken, telling you that there's momentum in the market. Why? Because it needs momentum to bash through a level. We are running green candles that are progressively getting higher. So this is telling you it's going up. So your 50% between here and here could now increase by maybe 10 percentage points. Why? Well, there's 5% telling you it's getting stronger. There's another 5% because you've cracked a level with green candles moving in momentum. Now, can we add something else to it? Of course we can. You can look at the candle itself. The here and now. This candle could be a nice big fat body. The one prior could be a nice big fat body looking like that. Well, what does this tell us? Well, it tells us there's a lot of volume in the market and it's not a flush out. How do I know it's not a flush out? Because the concurrent, they are growing as they go. A flush out is when the candles come small and then massively go big because it is just a single candle. But this is collective candles progressively moving up. Another way to look at it is if you can see something like that, where all of the pressure is to the top of the candle. So you've got a reasonable tail at the bottom, which means they try to sell, but the buyers push it up. So it's giving you extra percentage points all the time. This is just common sense. Then you can add something else into it. You can have an oscillator just coming around like that. And what you're looking for here is you can see these points here. As long as they're starting to grow higher or you're following it itself moving up, you can see the oscillators pushing to the upside. Common sense. What I'm driving at is just build up a simple system with a single idea. And what's the single idea? Well, if I'm trying to catch both waves, it ain't happening. But if I come to market and I think, right, I'm going to set my trend first. Trend. All right. Which is that and that. Now, it doesn't matter what moving averages you use, as long as you stick with the same ones. You can use a 20 and a 50, 89 and a 200. Don't matter. As long as you understand that the faster one, when it's above the slower one, is showing you the momentum. This is basic stuff. All right. So let me clean this down a second. And we'll go through it in a couple of steps and then we'll wrap up. Okay? Because trying roughly to give you an idea of how to build a strategy. First thing you need to know is there is no magic strategy. Every single one of them works. All right. So first thing, you want trend. How do I find that? 2 times MA. All right. In this case, it was a 50 plus a 100. That is the first thing you do before you do anything else. Then you want to see the price. Okay. Price. Where is it? Is it in the middle? Is it on levels? What? Right. You've got a level here and a level here. If the price is in the middle, you're going there. If the price is here, you are looking at the lower level and the price can go there or there. Widen the scope out. So you've got to start thinking like this. Right? So that's where the current price is. Get rid of that. Three. Want your TP and your stop. How do I define them? ATR. And then the last thing you do is you apply CS. That means common sense, guys. Don't go mental. Use common sense and you'll find that the markets are a lot easier than you think. Now, when you're hearing people talk about sort of 1 to 5, 1 to 3, all of this, it's fine. And to a degree, they are right. But think more of it as investment. If you invest X amount of money, you want it to grow by X amount of money. If you go in with a mindset of, well, I'm only going to put a tight stop in so I can get a massive return, the market has more chance of hitting that stop than it does of hitting your target. Common sense. Start at 1 to 1 and then build the layers in your favor. And then that way you'll find you make more money and you end up with a profit. And if you disagree with me, fine. But as I've just shown you, I've got many years doing this as a full-time living. That tells me I'm right. So there you go. So let me jump back on the screen and we'll put this into a summary. So genuinely hope that helps, guys. I really do. I know I get on a rant from time to time and I sort of look at the markets a lot different to other people. But the way I look at it is this. If the industry states that 90% of traders lose, does that not tell you that 90% of what you listen to is utter horseshit? Common sense. You know, you talk to any business owner, any, and they'll tell you, you get out of it what you put into it. You come into the business world because that's what trading is. It is a business. It's not a get-rich-quick scheme or anything like that. It is a job and a business. You put the commitment in, you put the time in, and eventually it'll pay off. But if you come in looking for instant riches and quick reward, very rarely happens. Very rare. There's an old thing that was told to me a long time ago. The first year you feed it, the second year it feeds itself, and the third year it feeds you. And that is a good sort of way of looking at business, because that's how it works. You know, when I first started trading, I plowed thousands into it just to keep it running. I plowed thousands into my education, and if I added it up, it's a colossal sum. You know, 15 years of spending quite a considerable sum in losses, education, seminars, and if I included Jim's salary, who sat on my shoulder, we'd be into mega bucks. So you work it out. You know, do you really think there's a free ride in this world? No, there isn't. Do you really think there is a get quick rich scheme? No, there isn't. But do you think there's common sense and hard work, and that hard work pays off? You'll be right. Something for you to think about. Anyway, drop your comments below. I'm always interested. If you want me to discuss something in Coffee with Scruff, again, just contact me. All my contact details are in the description. And I'll make a video of it. Because it's not always about strategy. In fact, most of it isn't about strategy. It's about the mindset and the homework that goes behind it. That's where the money's made. Not fairy dust schemes, and certainly not unicorns. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.